Hello and welcome to our webcast. I'm Christine Zucchetti with Moss Adams, and I'm going to get us started for today's session. Government Contractors Navigate the Pre-Award Survey. We're pleased that you've joined us today, and now I'm going to play our housekeeping video.
Welcome, and thanks for joining. We're pleased to present our continuing professional education webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. Today's session offers 1 CPE credit. To receive credit, you must meet the National Association of State Boards of Accountancy requirements. You must attend at least 50 minutes of the session and respond to at least 75% of polling questions. To participate in the polls, please check the button next to your answer within the slide window and click Submit. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry if you can't download your CPE certificate today. We'll email you a copy in 2 weeks. If attending this webcast in a group, you must complete our group CPE attendance sheet, available in our Slide Deck and Handouts widget to receive credit. Please have all group members sign it and send only 1 sheet per group. CPE credit can only be awarded to participants registered as themselves and isn't available for participants who view the on-demand version. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
We have 2 presenters with us today from Moss Adams. We have Rich Weber, partner, and Karen Melendez, senior manager. Their bios and contact information are located in your webcast console. And now I'd like to turn the floor over to Rich to get the presentation started.
Thanks so much, Christine. Hi and welcome, everyone. Got a little nervous there with the video delay, but my name is Rich Weber, and I lead our Government Contractors Solutions group here at Moss Adams. I work with a lot of government contractor businesses across really a wide range of industries. Primarily defense contractors in the professional services and technology sectors. I specialize in really delivering consulting services for government contractors with a focus on cost accounting standards, DCAA audit support, do some work in contract analysis and administration, cost and pricing analysis, and really ensuring compliance with the FAR and DCAA. My team and I are dedicated to providing high quality solutions that really add value and support the growth of our clients. Now I'll turn it over to Karen to introduce herself as well.
Hi, good morning, everyone. My name is Karen Melendez. I'm a senior manager here at Moss Adams in the Government Contractor Solutions Group. And my work here is primarily focused on consulting and accounting compliance for government contractors. And I'm happy to be here with you today.
Thanks so much, Karen. So really the government contractors navigate the pre-award survey. This guide is really going to provide you with the knowledge and tools you need to navigate this critical component of government contracting. It includes having an adequate accounting system that meets the criteria of Standard Form 1408, which we're going to do a pretty deep dive into. And we'll offer valuable insights to help ensure your Standard Form 1408 submissions are accurate, compliant, and successful. Next slide, please. So now we'll kind of recap the learning objectives. Discuss the first thing is discuss the purpose and importance of SF 1408 and gain a clear understanding of why the form is really a crucial part of the government contracting process and how it impacts businesses. We're going to describe the key components of the form. The requirements of a DCA compliant accounting system, some of the common pitfalls to avoid, and really standard practices for completing and submitting it accurately. And we're also going to describe how to maintain compliance with government requirements and prepare for potential audits relating to SF 1408 submissions. We're also going to identify some strategies for leveraging SF 1408 to really secure more government contracts as you grow your business. And with that, I think we go to our first polling question already.
Thanks, Rich. For the first polling question, what is your experience level with government contracting? A, beginner, new to government contracting. B, intermediate, some experience. C, advanced, experienced professional. D, expert, extensive experience. The polling questions are located right on the slides we are presenting. If you can't see it, you may need to hit the F5 key to refresh your console. To respond, please click the button next to the answer you choose and make sure to hit the submit button. I'll wait a few more seconds to give everyone a chance to respond. All right, let's see the results.
Thanks so much, Christine. So it looks like we've got a good mix here of just north of 60% beginners, about 25% intermediate, and then some advanced folks on here. So make sure not to answer any of their Q&A at the end. I'm just kidding. So now I'd like to give a kind of a quick background on Moss Adams and who we are. We're a full service national CPA firm. We offer traditional audit and tax services and then really a wide array of business consulting services. We've been in business for over 110 years, have over 4,400 professionals, and serve over 30 industry groups across 30 offices across the US. And then really, who's the Government Contractor Solutions Group? We really focus on consulting for GovCon. I'll just highlight some of the larger service offerings that we kind of work on. General FAR compliance, indirect rate preparation and analysis, we do a lot of work on. DCAA compliant accounting systems, what you're here today to learn more about. Really support for incurred cost submissions. We do a lot of CAS implementation and support. And then, of course, DCAA audit support, cost and price analysis, and then our IT and cyber folks have CMMC consulting and FedRAMP compliance. Those are some of the highlights of what we do. So now we'll kind of get into the standard form 1408. Really, this is a standard form used by the government to evaluate the accounting system of a contractor. It's used to determine whether the contractor's accounting practices are adequate for determining costs applicable to a government contract. The form includes a checklist of accounting system criteria that must be met in order to be considered adequate for government contracts. The criteria include areas like cost accounting, billing, timekeeping, and internal controls. The Defense Contract Audit Agency, or DCAA, is responsible for conducting audits of government contractors, really including pre-award accounting system audits that require the submission of standard form 1408. The DCAA reviews the information provided on the form to determine whether the contractor's accounting system meets the requirements of the Federal Acquisition Regulation, or FAR, and other applicable regulations. And then if deficiencies are identified, the DCAA may issue a deficiency report and really work with the contractor to address any issues before awarding the contract. So this is the actual form, and it's an evaluation checklist really intended to be completed by the DCAA. However, it's often requested that the contractor complete and submit the form to document the readiness of their accounting system, along with a proposal to either a prime contractor or to the government directly. Some of the key criteria on the form, as you can kind of see there, if you can read the font, are adequate segregation of direct costs from indirect costs. And we'll get into the distinction of these types of costs later in the presentation. An adequate timekeeping system is a big area on this checklist, an adequate billing system, and then, of course, an adequate financial reporting system. And really meeting these criteria is essential for government contractors to demonstrate their accounting system's adequacy for government contracts. And we'll dive into more detail on many of these criteria on the upcoming slides. So just to provide some background, I want to first discuss really a crucial aspect of government contracts compliance, and it's the accounting system administration as defined by the Defense Federal Acquisition Regulation Supplement, or DFARS, and specifically it's clause 252.242-7006. That's a mouthful, but if a contract has that DFARS clause shown in it, then the contractor is going to be required to have an adequate accounting system prior to the award of the contract. This clause outlines the requirements for a, quote, acceptable accounting system. So it's really essential for government contractors to understand these requirements, as they provide really the foundation for compliance and ensure the integrity of financial data. According to DFARS 252.242-7006, an acceptable accounting system must meet the specific criteria to offer reasonable assurance in several key areas. First, the system must ensure compliance with applicable laws and regulations. So this really means that your accounting practices must align with federal, state, and local laws governing financial transactions and reporting. Second, the reliability of the accounting system and cost data is really paramount. Reliable data is critical for making informed business decisions and maintaining trust with government agencies. So any discrepancies or inaccuracies can lead to significant issues down the line. The third item addressed in this is the system should minimize the risk of misallocations and mischarges. So this involves having controls in place to prevent errors and fraudulent activities that could result in incorrect billing or financial reporting. And then last, the contract allocations and charges must really be consistent with billing procedures. And this consistency ensures that all billed amounts are accurate and justifiable, which is vital for maintaining compliance and avoiding potential audits or disputes. So in summary, really adhering to these criteria not only helps in maintaining a robust and compliant accounting system, but also builds confidence with contracting officers and stakeholders. And ensuring your system meets these standards can significantly impact your ability to secure and manage government contracts effectively. So next, just some quick background on what is an accounting system. Some folks, in reading that terminology may deem that means a piece of accounting software, but it's not really simply referring to the actual accounting software that is being used by the company. It's referring to the total system. So the policies and procedures, the people, the processes in place at the company and the software. So accounting system really means the contractor's system or systems for accounting methods, procedures, and controls established to gather, record, classify, analyze, summarize, interpret, and present accurate and timely financial data for reporting and compliance with applicable laws, regulations, and management decisions. And it also can include subsystems for specific areas, such as indirect labor, indirect costs, compensation, billing, labor, and general information technology. And that leads us back to Christine for our next polling question.
Thanks, Rich. Yes, polling question number 2. What type of government contracts does your organization typically bid on? A, cost reimbursement contracts. B, fixed price contracts. C, time and materials contracts. D, other. As a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. Again, please click the button next to the answer you choose and make sure to hit the submit button so that the system can award you credit. We'll wait a few more seconds. Looks like we have almost everyone responding. And here are the results.
Thanks, Christine. Looks like a mixed bag here. Kind of a little bit of each category, and then a bunch over in other. And with that, I will pass it over to Karen Melendez.
Thanks, Rich. Hi, everyone. So we're going to take a dive and walk through the different criteria on the form, which gave a nice high-level overview. And what I'll do is take us through the criteria and provide some examples and illustrations. So the first criteria on the form is that the contractor, do they have an accounting system in accordance with United States generally accepted accounting principles, or GAAP? So I would imagine most of you are familiar with GAAP. Some of you may keep your books on GAAP if you have to do a financial statement audit or report to investors, or maybe you already have a DCA approved accounting system. But it is common for smaller companies to keep their books on a method other than GAAP, such as a cash basis, particularly if they're a cash basis taxpayer. So a lot of times being compliant with this form will be sort of the first trigger for a contractor to convert to GAAP. And really, GAAP helps ensure that financial information is recorded and reported consistently and accurately across different organizations, which makes it easier for investors and regulators to understand and compare financial statements. So some characteristics of GAAP would be accrual accounting, where revenue is recognized as it's earned, not as cash is received, or expenses are recorded in the period incurred, not necessarily when it's paid. So these principles allow for consistency and completeness across accounting periods. So that's the first criteria on the form. Now we'll move along. The second section covers that the accounting system provides for proper segregation of direct costs from indirect costs. And we'll describe the difference between direct and indirect costs on the next slides. So I thought it would be best to illustrate the difference between a P&L where there are no costs segregated, and then also show you what the DCAA is looking for on this checklist. So here's an example P&L of a sample engineering firm. You could see it's pretty straightforward, pretty simple. There's a section at the top for revenue and a section at the bottom for expenses, and that tallies up to the total net income. So as you can imagine, this isn't compliant with the criteria on the form, which requires segregation of direct from indirect costs. So what does that mean? So in order for a contractor to segregate costs, they need to define what's a direct cost and what is an indirect cost. And one of the important parts of the contractor's accounting system is to have their policies and procedures documented in an accounting manual. So this accounting policy, this accounting manual should have a section in it which explains different types of costs and how the contractor defines a direct cost versus an indirect cost. And employees at the company who are responsible for coding those costs should be trained on that so they can code transactions correctly. So in government contracting, a direct cost is a cost that can be specifically attributed to a particular project or a contract. So an example of this would be direct labor, direct materials, direct travel, all costs associated with a specific contract. Whereas an indirect cost would be an expense that can't be attributed to a contract or a project, but it is a necessary cost of the business. So something like rent or utilities, management salaries, those would be examples of indirect costs. So it's very important for a contractor to properly distinguish between direct and indirect costs, because that is ultimately how they're allocated and reimbursed to the contractor and billed to the government. So on the next slide, we'll take a look at the same company's P&L, but we'll have the costs segregated by direct and indirect, which is in accordance with the standard form 1408 requirement. So if you take a look at this, there's definitely a lot more happening. There's a lot more sections. It's the same P&L, but as you could see, we have direct costs segregated at the top. So we have a section that includes direct labor, direct subcontractors, and then you'll notice the bottom, there's several different pools, indirect cost pools of indirect expenses. So one of the requirements is to segregate costs into homogeneous cost pools, which means costs that are incurred for a similar purpose. So as you can see below, there's several indirect cost pools here, and we'll get into some of those on a later slide, but you'll see there's a facilities pool, a fringe pool, overhead, G&A, and unallowable. But you can see this P&L is the same in net income as the other one. It's just segregated in a manner that's required on the checklist. So the next criteria that we'll talk about is identification and accumulation of direct costs by contract. So what this means is it's not enough to just assign something as a direct cost. You have to take it one step further in the accounting system and actually record it and accumulate those costs at a level specific to that contract or project. So, most accounting systems will have this capability to have a separate field. It may be a customer field, a job field, a project field. Those are typical ones that I've seen. So basically a good rule of thumb is if you're coding a cost to a direct labor or direct travel or direct materials, that it needs to have a project or a contract associated with it. And this allows that cost to be accumulated at the level, which is very important for billing purposes. And again, this should be defined in the accounting policy, like how those projects and contracts are set up, what's the process for setting it up, and how are those charged to direct efforts? Is it something that comes in through a payroll allocation or accounts payable, things like that. So the next criteria we'll talk about is a logical and consistent method for the allocation of indirect costs to intermediate and final cost objectives. So this is where you're really going to define what are your cost pools, what types of costs get coded to those, and then how are we going to allocate those out either to an intermediate cost objective or a final cost objective. So this means having a systematic and consistent approach. It involves identifying indirect costs that can't be attributed to a specific contract, such as overhead, and how are we going to go ahead and allocate that out. So this slide is going to take us through an example. You'll see at the top, we have a couple of different intermediate cost pools, and this is going to show us how indirect pools flow either into a final cost pool or how it's going to flow to a final cost objective. So let's go from the top to the bottom on this slide. The top two are going to be the intermediate cost pools. So those are costs that are incurred that aren't going to get assigned to a contract immediately. They're going to get assigned first to a final cost pool. So you'll see on the top left is the facilities pool. And this pool will generally include costs such as rent, depreciation, insurance, utilities, things that are driven by the use of the contractor's facility. And really for each of these pools, you want to come up with a base, which is how are those going to get allocated? And you typically want to allocate based on what's the driver and who's consuming those expenses. So facilities, a couple of common bases that I've seen are either based on headcount. So you'll allocate whether it's an overhead person or a G&A person, and then you'll allocate the facilities cost to those pools accordingly. I've seen square footage used where you'll take, overhead square footage on how much floor space they're taking up and allocate it to those pools. But you can see in the example we have here, there's 7 employees, 5 of them are overhead, 2 of them are G&A. So that prorated amount will get allocated down to the overhead pool or the G&A pool. And if we move to the right, the next cost pool is going to be fringe benefits. And those are really going to be all the expenses that are directly linked to payroll, like payroll taxes, vacation, maybe retirement plan contributions. And those will be allocated over the base of total employee labor. So you'll see the different labor categories of direct labor, overhead wages, G&A wages, and now those prorated amounts will get allocated down to those final cost pools. And if we move down to overhead on the left bottom, those are basically costs that are going to be in support of operations, but they can't specifically be identified to one contract. So things like that might be technical software, equipment, overhead labor, maybe like a project manager who's spending time overseeing a bunch of different contracts, dues and subscriptions, things like that. And the base that usually gets allocated across will be direct labor, since those are the people consuming those expenses, the people really working on the technical aspect of the operations. And the G&A pool, which is the last one on the bottom right, that's basically a pool that will accumulate costs that support management and administration of the total organization. So costs that really are going to be incurred whether or not you're working on contracts. So things like HR, maybe accounting, business management, things like that. And typically those costs are allocated amongst all other costs because they're really driven by the full operations of the business. So, I mean, this is sort of really a good illustration of what the checklist is trying to get at with respect to a logical and consistent method. So basically a contractor will implement their cost pools and their bases, and that's really their indirect rate cost structure. And they want to apply that consistently over and over again to all contracts. So now we'll move into the next slide where we're illustrating what that means. So if you look at the color coding, the orange cells, those are going to be the direct costs. So those are taken directly from the P&L we had a few slides back, but really now it's driven by where those direct costs were coded. So we have 3 sample projects, and you can see then how those indirect rates are now applied consistently to each of those projects. So what we'll do is we'll start with direct labor at the top, and then fringe will get allocated to direct labor. Overhead will get allocated after that, which will come up to a subtotal. We'll add in other direct costs coded to those specific contracts, and then we'll add in G&A applied that same rate across all of those contracts. So this is really, this is the foundation of a cost plus billing, which is why it's so important when a contractor is going to be awarded a cost reimbursable contract. The government wants to make sure that you have all of these steps in place so that they can rely on that billing. And the next criteria on the checklist is that the accounting system needs to provide for accumulation of costs under general ledger control. And this really means that contractors should have in place a system that allows them to track and report all their costs in a way that's consistent with their general ledger accounting system. So, for example, entries into the general ledger must have a debit and a credit in order to be a balanced transaction, which would allow it to properly roll up into financial statements. Okay, we're going to keep going down the checklist. So another criteria is that the accounting system has a timekeeping system that identifies employee labor by intermediate or final cost objective. So it's not enough for employees to record the time that they worked for their day. They must actually allocate their time based on what they worked for. And we'll show an illustration on the next slide. So here's an example of a timekeeping systems export. It's 2 employees, John Smith and Michelle Jones, for an example pay period of April 1st through the 15th. And, you know, this client system is set up so that labor is identified by the effort that they work on. So you could see, in addition to the date, the name, and their amount of hours, there is a space for, you know, customer, project, account code. So there are things like holiday, there's things like overhead, but then there's also things like direct labor where a specific customer and a specific project are identified. And the next slide will show the same time card, but I wanted to highlight a couple of additional things that are important with respect to this checklist. So let's look at a couple of entries from the ones on the previous slide. So really, employees, whether they're salaried or not, they need to record all their time worked. So even if they're not getting paid for their overtime, they need to record the amount of time that they've actually worked. So in this example, on April 3rd, you'll see John Smith, he worked 10 hours a day. So even though he's salaried, you know, and technically is getting paid for 8 hours, we'd still want him to report the 10 hours. In addition, we're reporting specifically what people are working on. So on April 5th, John worked on 2 different contracts. So we'll, you know, he would want to make sure that he's recording his time split as he worked. A couple of other things just to keep in mind that are important for a timekeeping policy, which should also be a section in the contractor's accounting manual, is that the time should be recorded daily, not done, you know, at the end of the pay period. All paid time off, like sick time, holiday, vacation, should be recorded on the timesheet. Employees must sign off on their time, and it must be approved by their supervisor. And any changes should only be made by the employee. And also, the employees should really be trained on these processes at least annually. So the next section on the checklist I'm going to cover is that there needs to be a labor distribution that charges direct and indirect labor to the appropriate cost objectives. So there's a few things happening on this slide that I wanted to illustrate. And many accounting softwares will handle this labor distribution automatically. I've seen it happen with Uninet or Deltek, where others like QuickBooks won't have that functionality built within it. So the labor allocation needs to be done manually with a journal entry. And I think it's good that even if your system does handle this automatically, it's good to understand the underlying requirement and transaction behind this process, and then how it ties back into the SF 1408. So you'll see at the top, we have basically each employee's salary per pay period along with their hours worked, which is calculating their effective hourly rate. So this is based on their fixed salary and their hours worked, which might be variable, that they worked in the pay period. And since those hours might change each pay period, their effective hourly rate might also fluctuate. But calculating this effective hourly rate is an important part of the process. And then you'll see at the bottom, we basically took a pivot table of the timesheets from the prior slide. And really what we're going to do is apply that effective hourly rate to each of the hours that each of the employees worked on the various efforts. And then you'll see that assigns a labor cost to each of those timekeeping efforts. And basically at this point in the payroll accounting process is that you would book a payroll journal entry to record the related labor into the accounting system. And you could see that the total allocation for each employee matches their total salary for the pay period. And this is an important part of the checklist. Okay, so I think now I'm going to turn it back over to Rich, and he's going to walk everybody through the rest of the checklist.
Thanks so much, Karen. Yeah, so really, I think just taking a step back, where are we at in the form? You know, we've gone through quite a bit of material, kind of detailed material covering the first half of the form. And then, you know, as we look into, you know, the next few sections, you've got really questions 3 through 5 that will be covered in this latter half. So, you know, really, if you look at what the criteria, you know, the remaining criteria, interim or at least monthly determination of costs. So this is basically stating that you've got to close your books at least on a monthly basis. So, you know, if you're closing it quarterly or semi-annually, that may be okay, but generally the form states it needs to happen at least on a monthly basis. You know, exclusion of costs charged to government contracts of amounts which aren't allowable. That's another kind of big area on the form is, are there items on there that shouldn't be on there? Are there unallowable costs like entertainment expense or alcohol or similar items? You know, if you look at FAR Part 31, it guides what costs are expressly unallowable. So some of the other ones are bad debt expense, charitable contributions, fines and penalties, interest expense. You know, and in the P&L example provided earlier that showed the various indirect cost pools, you might have noticed that interest expense was included in an unallowable cost pool, which would not really, shouldn't be allocated to a contract. In addition to the expressly unallowable costs, there may be some costs that are allowable under the FAR, but are not allowed to be billed to the government based on certain contract provisions. So that's what this part of the form pertains to. And then we get into identifying costs by contract line item and by units. So if that's required under the proposed contract. So an example of this would be labor, travel, materials, and sometimes billed separately. And if so, they're required to be accounted for at that level. The next item is segregation of pre-production costs from production costs, if that's applicable. This means that contractors really must be able to segregate costs associated with pre-production activities, such as design, engineering, and testing, from costs associated from production activities. So, you know, such as manufacturing and assembly. So now we cover, if you're looking at the form, sections, we continue to go down sections 3 through 5, and SF 1408 checklist number 3 states that the accounting system provides financial information required by contract clauses concerning limitation of costs or limitation on payments. This really means that contractors have to comply with the FAR in this area. So it's really a limit on the amount of costs or payment that can be charged to the government under the contract. So these clauses are required to ensure that a contractor doesn't exceed the estimated cost of the contract or limit of the funds allotted. Number 3, we're still on number 3, the checklist also states that the accounting system provides financial information required to support requests for progress payments. So this really means that contractors must have an accounting system in place that allows them to provide for accurate and reliable data to support requests for progress payments based on a % completion or other milestone. So the accounting system really has to be able to track and report all costs associated with a particular contract or the project on a regular basis. And then number 4, 4 and 5 are kind of some of the shorter sections of the checklist, but very important. Number 4 states that the accounting system is designed and the records are maintained in such a manner that adequate and reliable data are developed for use in pricing follow-on acquisitions. So really this means that the accounting system could be relied upon for future proposals and related pricing. And then the last item on SF 1408 is item 5. And this is really asking, is the accounting system currently in full operation? So, you know, the question comes up, you know, I thought that it was, you know, could be a pre-award review. So since the pre-award audit is on the design of the accounting system, the review can be conducted on an accounting system not yet implemented, but designed and ready to use, even though the question asks, is this accounting system currently in full operation? So, and that brings us to our next polling question.
Thanks, Rich. Is your organization currently compliant with the SF 1408 criteria? A, yes. B, no. C, not sure. Also, you do have the option to submit questions for the presenter in the Q&A window. We have quite a bit of content still to cover, so if we don't have time to respond during the webcast, we will do our best to follow up with you afterwards. All right, and with that, here are the results.
Thanks so much, Christine. So it looks like we're, as expected, there's probably half that are not sure, which is not surprising. So now we get to preparing for the pre-award audit. You know, the question always comes up, you know, what triggers a pre-award audit? And, you know, typically the contracting officer is involved in the request to have the DCA conduct an audit. Really once the contractor is preparing to bid on a proposal which requires the adequate accounting system per FAR Part 16.301-3A3. So, you know, a cost reimbursement contract may be used only when the contractor's accounting system is adequate for determining costs applicable to the contractor order. So a common misconception is that contractors can request the audit just kind of whenever they need it. Contractors cannot simply request the government perform the review. The request for the audit is generally going to come straight from the contracting officer involved in the solicitation or proposal. So the pre-award accounting system review determines adequacy of the contractor's cost accounting system, not the financial accounting system. So the financial accounting system reports total amounts incurred for each cost element, such as labor, materials, et cetera, at a company-wide level. And the cost accounting system distributes and allocates costs among specific contracts, jobs, or other cost objectives in a causal and beneficial relationship. So really, you know, what documents do you need to gather? DCAA is going to send a request list. You're going to get a letter, and it's going to contain requests such as the accounting manual, the company's policies and procedures manual relating to things such as indirect costs, direct labor, travel, timekeeping, billing, unallowables, et cetera. They typically ask for an org chart. They're going to want to know who's, you know, in the accounting and finance function and contracts function at the company. They might ask for ICE models, incurred cost submission models, a balance sheet, and a profit and loss is the typical first pass pre-award audit request list. You know, what's the purpose of the audit? Again, it's evaluation of the design effectiveness, not the operating effectiveness of the accounting system. So, you know, you're typically going to get a mix of inquiry of appropriate personnel, observation of the entity's operations, if applicable, and inspection of relevant documentation. Is kind of the way the process works. DCA always does, or typically would do walkthroughs of the accounting system that really include a combination of the above procedures. And even if it's not in operation yet, they're going to want to walk through what process has been set up. The DCA is big on setting up processes and then walking through what those processes are to ensure that the contractor has the ability to properly track costs at the end of the day. So there's going to be some possibly detailed testing of transactions and reperformance of controls, but they're not necessary when testing the design effectiveness of the system. So a couple other standard forms, 1034 and 1035 would be good to familiarize yourself with those forms. These can be found on many government websites and are forms used by the contractor to request a payment on a contract from the government. So typically during a pre-award audit, the auditor will have you prepare a sample one so that you really know what needs to be completed. All right. Common pitfalls in the pre-award audit. Really not having things documented is kind of the first one that I like to highlight. It's the DCA really wants to see things written down, and some companies come in and say, well, we don't have anything written down. Well, that's typically a problem for the DCAA when they're judging the adequacy of the accounting system. So timekeeping issues are a substantial area that can be a pitfall. If you have lack of time card approvals, missing timesheets, cost objectives not identified within the timesheets, those are all kind of pitfalls. And the approvals can be electronic. There's different ways to automate some of this, but definitely could be a pitfall area. Lack of policy documentation. Policies not sufficiently documented for really any of the criteria mentioned above. I think I kind of already went over that. Costs not segregated into cost pools that are logical. The auditor may realign some of the costs to a different pool based on the nature of the expenses. That can be, I've seen that in a pre-award audit. Unallowable costs included, so not, you have those costs such as alcohol not segregated into their own pool to ensure they're not included in government billings. That's kind of another big pitfall. So next we have just a couple of, as we get close to wrapping up here, really DCAA publishes their pre-award audit survey work program directly on their website. So this isn't a secret as to what they're going to be looking at. Couple things to make note of are really, as stated, transaction testing is not a required part of the pre-award audit. It's a system design audit. So the focus is really on the design of the system, the total system and its capabilities. So inquiry alone is not sufficient. The auditor's going to want to review documentation and walk through processes with the contractor. That's just a kind of a given. So, key kind of takeaways: document your policies and procedures. Just can't say it enough. Develop and follow a robust timekeeping system, I would say is kind of the next best practice to highlight. And really training. So in totality, everything that's been discussed, there should be some training on those involved in the contract accounting life cycle and system in your company. It's really so they're familiar with these requirements. Anytime you're in government contracting, you want to have good training of your employees so they're aware of the different cost elements and all the requirements pertaining to proper accounting and compliance with these government contracts. And with that, we will kick it back to Christine for polling question number 4.
Thank you. How confident are you in your organization's ability to pass a DCAA pre-award accounting system audit? A, very confident. B, somewhat confident. C, not very confident. D, not at all confident. For those of you that would like a copy of today's slides, you can download them now from the console. We will also be sending them out via email tomorrow, along with a recording of the webcast. Just wait a few more seconds for some more responses to come through. All right, and here are the results.
Thanks so much, Christine. Yeah, this is kind of a mixed bag. Very confident, especially following this this presentation. Somewhat confident, so about half the group, and then really some folks that are not comfortable at all. So the good news is that there's, like I said before, there's no secret as to what they're going to be looking at and what needs to be set up and documented and in place on this stuff. So, all right. I think that kind of leads us into we've got about 5 minutes left to answer some of these Q&A questions. It looks like we've got one here pertaining to the time card being kept in Excel. And maybe, Karen, if you want to take that one.
Sure. Time cards can be kept in different fashions. So there are online timekeeping system, but if that's not, something that you're at that level yet, I think it's okay to have one kept in Excel. But what I would recommend is to maybe print that to PDF and have the employee sign off on it and date it, as well as the supervisor, and that would become your official, time card of record. That way you don't have, the question of was it changed afterwards. And obviously you can use the Excel time card to help create that labor distribution that we went over earlier. But, you really kind of want to have that audit trail. And that's really what the online timekeeping systems sell, is that audit trail, so you can see when it was signed off on, when it was approved. But I would say, I think you can definitely keep it in Excel, but I would put some of those controls in place.
Thanks, Karen. Looks like we've got another one here. Is there a standard accounting manual or example available online? I've seen a lot of various templates out there that you can certainly start with a template, framework that addresses kind of some of the compliance that we've just kind of gone through. And so I wouldn't say that there's, DCAA doesn't, to my knowledge, offer just a PDF download that, kind of fill in the blanks for the contractor. You would hope that they would, but they don't. But there's definitely, online sample accounting manuals out there, and certainly a professional services firm can assist in kind of customizing those templates for your own internal processes and exactly the way your company's handling things. Let's see. Got a question here. I think we've got a couple of minutes left. We got a question here about, really what role does technology play in the standard form 1408 requirements? Certainly technology plays a significant role when it comes to setting up the process and really automating certain aspects of your accounting cycle. So, more advanced accounting software can really help contractors accurately segregate costs, maintain detailed timekeeping records, generate the necessary financial reports. So really the technology and automation can really improve efficiency, reduce human error, and really ensure consistency in following accounting procedures, all of which are critical in passing the audit. So, and then let's see, is there...
I see one, our marketing and sales costs included as G&A. And that's one I would say depends. Sometimes with unallowable costs, it can be a little bit gray based on exactly, what types of efforts there are. So, efforts such as going to a trade show where you're promoting your company, or advertising costs, those types of costs would be unallowable. But there might be some that are allowable. So it really, just depends. If you want to contact us, offline, we could kind of dive into some of those in a little bit more detail.
Thanks so much, Karen. And with that, I think we've reached near the end of our presentation today, and we appreciate everyone for joining us, and thank you so much. And I'll kick it back to Christine for the closing.
Thank you, Rich and Karen, for a great presentation today. To our audience, if you have any further questions or comments, please reach out to us, as we'd be happy to continue the conversation. You can drop a note in the Q&A window or reach out to the presenters directly. Their contact information is in your console, as well as in the slide deck, which you can download now from the handouts window. If you meet all CPE requirements, your certificate is available to download now in the CPE progress window. A copy will be emailed within 2 weeks as well. Finally, here's a link to our survey for today's presentation. Your feedback is always appreciated. Again, thank you for joining and take care, everyone.